The next speaker is Dr. Ajay Kumar Gupta. See, he is an executive member of the Central IAP 2021. He is the national coordinator of Mission Kovan Uday. He is the president of IAP East Delhi branch. He is the director of Muskan Clinic, and he is secretary of IAP. He has been the secretary of IAP Delhi State in 2019, and he has been a trainer in COPP, NRP, NTEP, and MQA. So MKU. So today he'll be telling about the insurance and the right amount of the insurance that we should take. Please go ahead, sir, with your talk, sir. Thank you.
Thank you, Dr. Riddhi. Good morning. I thank all the organizers for giving me this opportunity to talk to you. Let me share my screen. My screen is visible. So today we are going to talk about insurance. You must notice that the topic has been kept as risk management, because once we perceive some risk, either we try to mitigate it by sharing it with someone or transferring the risk to some other entity. That is called insurance. So what we do is we look at the potential personal losses. It can be illness or death, or they can be potential liability losses. These can be due to the professional liabilities. They can be potential property losses, which may be due to earthquake, fire, etc. Once we identify the risk, then we can do a risk evaluation and take a decision what to do with this risk. So one, we can have a risk avoidance. If we maintain a healthy lifestyle, we do regular exercise, we can reduce the illness and avoid the health expenses. And risk reduction, if you're taking proper precautions while doing our practice, we do protocol-based management and take all the precautions and do proper examination, that will be the risk reduction. There are certain situations which are very high probability and very frequently occurring with low financial impacts. So here we can retain the risk. Another example is if I have sufficient money, I don't need insurance. So that is the risk retention. And coming to risk sharing, if I transfer some of my risk to another entity or transfer it completely to another entity, that is the insurance. So once we have identified whether we want to share the risk or transfer the risk, we need to select an insurance company. So risk can be pure or speculative, because speculative risk, say once you are dealing in the stock market and doing trading, it is a speculative risk, but no company is going to insure it. So sometimes the risk can be uninsurable. And sometimes the pure risk, they can be insurable or not insurable. So we'll be talking more about the different kinds of insurances which are available, like personal, these can be life insurance, personal accident insurance. A person who is the key person in a company, they take key man insurance. Then we have medical insurance. These can be health insurance, super top up, critical illness, where we get the benefit. Rather than once we are diagnosed with some critical illness, rather than reimbursement of the medical expenses, we get defined benefit as per the scheme. And then certain insurance, medical insurances are available, which are disease specific. These may be due to the corona, and once the dengue was there, and we have also some cancer policies also. Then we have due to the professional liability, medical indemnity insurance. Once we are traveling, we try to take travel insurance, which covers our travel related risk as well as the health related risk once we are abroad. Then we take vehicle insurance. These can be comprehensive or third party. Comprehensive can include our own damage to the car in case of accident. If we had hit someone and have to compensate that person, that is the third party insurance. And our property, we need to take the burglary or any damage to the property due to earthquake or fire. We need to take that risk. So once you go to some online platform, you will find lots of choices available. So buying insurance from the online portals may be little cheaper as compared to physical insurance. And also, though everyone is aware of the importance of life insurance, India is at the bottom of the number of persons who are insured, only 3% coverage. Only 3% of the population is having the life insurance. So today we are going to talk more about the life insurance as well as health insurance. So once we have decided we need life insurance, we need to select a company. Which company we need to choose? This can be based on the premium, the lower the better, or based upon the claim settlement ratio of the company, whether the company is paying properly or not at the time claim is raised. These can be the number of policies it has paid as the claim were there, and the amount of benefit it has paid. Say the company received claims of about rupees 100 and it paid only 60 rupees. That means they are not going to pay large amount of claims. And also the time taken by the companies to pay the claims. If they're taking longer time to pay the claims, that means we should avoid that company. Then coming to choosing a life plan. Here, many options are available. The simplest answer to go with a pure term plan. While going through various products, you will come across money back plan, endowment plan, unit linked insurance plan, child plan, assured income plan. So in the first category, there are normally two categories. One, in the first category where you get some money during the term of the policy or end of the policy. And in the second category where you don't get anything during the term of the policy as well as end of the policy. But only if some incident happens, then the nominee gets the money. That is the pure term plan. It is quite cheap as compared to the rest of the plans, and it provides large amount of insurance with a nominal premium. So coming to the various claim settlement ratios of different companies, there are about 24 insurance companies who are doing life insurance. If we look at the number of policies that have been paid, in this blue line is indicating the number of policies that have been paid, and the green indicates the benefit amount paid. As we can see, there are many companies which have a claim ratio of more than 95% for the number of policies. Most of them have, but there are some companies like Shriram which have a very low claim ratios as compared to the others. And the benefit amount paid, if you look here, there's only limited number of companies which have paid more than 95% of the benefit amount. One, there is Tata AIA and the Bharti AXA, which have paid more than 95%. LIC, though it has a high number of policy claim ratio, but the benefit paid is little less than the 95%. There are certain companies like Shriram, which have only about 75% of the benefit amount which is paid. So how do we calculate the sum insurance? How much insurance we must take? As Dr. Kolundu was discussing, now the returns, fixed income returns are in the range of 5 to 6%. So we need to have at least 20 times the annual expenses of the dependents. Say if we have a monthly expense of around 50,000, so the annual expense will be around 6 lakh rupees. So 20 times that, it will be 1 crore 20 lakhs. And if you have any remaining debts, say a house loan, car loan, we should add to it. And if there are any impending large ticket expenses, say child of the marriage, marriage of the child, or any college admission which may use large amount of money, we can add to it. Then we can subtract from it the earning capacity of the spouse and the assets or savings which we have already built up. So from the total amount, we can take the insurance. So what should be the tenure of the policies? Most of the policies, they are till life, sometimes up to age of 99 years, or sometimes up to the retirement age, say 65 or 70 years. But if we plan to retire early, say I have built up savings, as Dr. Kolundu was again discussing, say retire at 50 years. That means I have built up sufficient savings to sustain my family. Then we don't need insurance after 50 years of age. So accordingly, we can choose the tenure of the policy. Next thing we need to choose is the premium paying term. Say we have, I'm 45 years of age, I have taken the policy till 65 years of age. That means I have 20 years of premium paying term. But companies they sometimes prefer to speed up the premium paying term. They will lure you with you can pay in a single uh, go the premium for the whole of the tenure, or a rapid uh, payment of their premium. But this is not advisable, because once you have paid the company in a single premium, then you have no option of changing the company or to discontinue the policy, because premium has already been paid. So you lose the flexibility to change the insurer. And if you have accumulated sufficient wealth, say I'm 45 years and have accumulated sufficient wealth by the age of 55 years, then I don't need to continue with the insurance. So I can simply stop paying the premium and the policy will lapse. So, but if you fast track the premium and pay all of them in advance, the insurance company will hardly refund it. Also, by paying the entire premium in one go, you forgo the option of claiming tax deduction under the Section 80C, which we are going to discuss in little while. What are the tax benefits which are available in the subsequent years? Next thing that we need to consider is the riders. There are many riders which are available, like accidental death, critical illness, waiver of premium, or return of premium. In accidental death, if this rider is attached to your policy, there will be some extra premium, but the death benefit, the sum assured paid at the death, will be double the sum assured. So this is a very, very useful rider. Critical illness, this is a defined benefit rider. If we are diagnosed with some critical illness like stroke or heart disease, cancer, the company pays the stipulated amount because at that time the company is not going to pay the sum assured because the death has not occurred, but it will pay the critical illness defined benefit, which will take care of the future premiums and the regular expenses. Waiver of premium, if you become disabled due to some accident or something, there will be an option of waiving of the future premiums. In coming to return of premium, here the company is charging you extra premium. It will just take extra premium from you, and at the end of the policy, will return the premium to you. So there's no point in giving more premium to the company and taking it back. Now, once we have taken the policy and God forbid, we need to take the payout. There are two types of payout are available. One is the lump sum, where the company pays the sum assured in one go, or they can be monthly. But the monthly payout can be very, very less. So for the most of the beneficiaries, it will be useful to have benefit payout at one go. They can invest it in simple mutual funds or debt funds, which will give them regular income, which will be much more as compared to the insurance company payout. And if they need some large ticket expense, they can easily meet it also. So what is the taxation related to the insurance? There are many sections, mainly ETC, ATD, and Section 10D. ATC is related to the tax benefit where the limit is around 1.5 lakhs, but this will include all the savings in the home loan and the various ATC tax deduction investments, as well as the school fees. Section 80D is related to the medical insurance, where they get reduction. This will discuss in the medical insurance. Section D is for the benefit payout. This is related to the payment of sum assured at the maturity, surrender value, and the death benefit. So it is tax-free subject to any policy which was issued from 2003 to March 2012. If the premium exceeds 20% of the sum issued, it is taxable. That means this, if say we were paying premium of 1 lakh and the sum assured was less than 5 lakhs, then whole of the proceeds at the maturity or death benefit will be taxable. And if they say I'm paying a premium of 1 lakh and the sum assured was 10 lakhs, then it becomes tax-free. So this was to encourage the more sum assured. And in the policies which were issued from 2012 onwards, this has been increased to 10 times the sum assured. The premium paid, say if I was paying 1 lakh of premium every year and the sum assured was only 8 lakhs, then it becomes taxable at the maturity. Or if the sum assured was 15 lakhs, that means it becomes tax-free. Coming to some examples in term policy, here insurance on the policy bazaar, if you look for some term policy for 1 crore and the maturity age is 75 years, that means you'll be paying premium every year. The term premium is around 28,000. And this is a plain vanilla insurance. This is comparing oranges to oranges. So we can just compare the premium and take the insurance. But if we add the return of premium money back rider, then the premium jumps. That was 28,000. Here it has become 40,000, and even the age has been reduced. And in the capital guarantee schemes, if you see companies taking almost 10,000 rupees a month and is providing premium paying term of 10 years, but the life cover provided is only 12 lakhs, which is nothing. It will just cover the expenses for about 1 to 2 years. So we need to have a large sum assured so that the dependents, they can have a comfortable life after you are gone. And don't go by the various brochures which give very fancy names to various policies. If you read them carefully, in this policy, the investment risk in the investment portfolio is borne by the policyholder. The company is taking minimum risk, but the whole of the risk has been shifted to the policyholder. So we must be very, very careful in reading all the terms and conditions. And there are many, many hidden charges. If we look carefully, the annualized premium was 55,000, monthly morbidity charges 880, other charges 5,400 rupees, and GST. Other charges, what are the other charges? These are the premium allocation charges, policy administration charges, fund management charges, and rider charges. So initially they will say you will be investing all the money, but without specifying the deductions. But if you look carefully at the calculations, then you find that much of the money out of the 55,000, only 45,000 was invested. So we have to be very, very careful once we are reading the benefit illustrations. So this is in short about the life insurance. Now we are coming to the health insurance. So in the current situation, when the world is facing one of the worst health crises in a century, the first thing that comes to our mind is health insurance. If we zero down a plan which the agent say you are happy or just have got the cheapest one, there can be very big gaps between the understanding about the health plan and need to fill the same with the proper knowledge. So there are two major kind of health plans. One is individual health insurance policy, other is the family floater. So, and individual health plan can be, we can take an individual plan, it can be part of a group health plan, like some company. It can be provided by the government or some agencies like ESI health insurance or Rashtriya Swasthya Bima Yojana. And sometimes we are traveling abroad, we need to take the travel health. And there's a special category called super top-up, because if one needs to undergo some transplant, then the normal health insurance will not be sufficient. If the expenses are in the tune of 30 lakhs, 40 lakhs, 50 lakhs, the normal health policies, they are covering up to 10 to 15 lakhs. So we can always think of super top-up plans. Again, how to choose a health insurer. And the family floater, unlike the individual health insurance policy, a family floater covers all your family, and this you can share the sum assured with financial dependents. Such policy also cover your extended families and in-laws, but we have to remember that while calculating the premium, the age of the highest age member will be taken into consideration. So we have to choose carefully. This will be the family floater plan will be good for nuclear families where their husband, wife, and children are there. And now, how to choose the health insurance? Again, we have to look at the incurred claim ratio, how much premium or the benefits have been paid, what is the percentage of claims that have been cleared, and what is the timely resolution of the claims. because there are three types of health insurance companies. They are private or public. Private is like Max, Bupa, etc. Public like New India, Oriental, General Health Insurance, and there are some standalone like Star Health, etc., which do only the health insurance. So coming to the incurred claim ratio of the public health sector companies. In this National, New India, Oriental, and United India, before if you see, most of them are quite generous in the benefit payout. If most of them have more than 100% of the incurred claim ratio. This doesn't mean that they're paying from their pocket. They are basically subsidizing it from the various other insurance products that they have in their kitty, like marine insurance or some other fire insurance or motor insurance. So, but a company who has a payout ratio of 75 to 90% is preferable. This is because ICR above 90% shows that the insurer is either settling high-risk claims such as claims of senior citizens or is not diligent enough to reject inappropriate claims. And on the flip side, if it is below 75%, it means the company is very stringent while settling the claim or is more profit-oriented. If you see here, some of the companies, they have very low incurred claim ratio. Their payment is even less than 50%. So any incurred claim ratio between 75 to 90% is ideal. In this graph, this is the private insurers. This can be, ICR can be as low as 21% with like Eco General, and it can be as high as 113% as with the Edelweiss. But having said that, most of the popular health insurance like HDFC, ICICI, Tata AIG, they have ICR below 75%. So in this, only the Edelweiss General, which is well placed as per the incurred claim ratio, but the standalone health insurance companies like Aditya Birla, HDFC Ergo, or Max Bupa, Reliance Health, of these, they have only health insurance product in their bucket. So looking at the ICR of these standalone, only the HDFC Ergo, which is having a good claim ratio of more than 75%, stands out. Now coming to the percentage of claims resolved by the insurance companies. Over here, again, the New India, which has a claim settlement ratio of more than 94%, stands out. Though the National is paying around 83%, Oriental 92%, United India 90%. Although the insurance regulated, we need to, and the private health insurance companies, again, we have to be very careful. Over here, the SBI General, which has a high claim ratio of about 96%, and the Tata AIG 95%, even the Bajaj Alliance, and the Go Digit and the HDFC Ergo, which have around 94 to 95% of the claims, percentage of the claims resolved. So, and in the standalone companies, Reliance Health and the Religare, which have a poor as compared to the other, Max Bupa resolved the highest claims of about 99%. So, as per the incurred claim ratio as well as the number of claims resolved, then we come to the age-wise claim ratio. This is the how much time the company took while resolving the claims. In this, only exception was in the private health insurers, Reja CV, which took more than 1 year in about 40% of cases, but most of the claims were resolved within 1 year. And in the private in the public sector insurance companies, it was the national insurance which took more than 1 year for about 35% of the claims. that means this company is very stingy or is creating too much of problems for the people to claim the benefit. And in the standalone health insurance companies, most of the companies, they could resolve most of the claims within 1 year. Almost all of them resolve the claims within the 1 year. And by shortlisting all these factors, here we can see the different individual health policies or the family floater policies. Family floater will include husband, wife, and 2 children, which have been shortlisted. But you must go through the various features like room rent limit or the copay. Copay is the amount you need to pay, whatever the claim is there, or if they're providing any no claim bonus or restore bonus. So for the individual health policies, for a 10 lakh health insurance, the premium is somewhere around 9.5 to 11,000. And a family floater for 10 lakh rupees is somewhere around 22,000 to 31,000. This may be depending upon the various benefits provided by these companies. And coming to super top up, this is the kind of copay where you agree to pay, say, about 2 lakhs or 3 lakhs from your pocket or from your basic health insurance. And if the claim is more than, say, the minimum stipulated amount, then the super top up comes to play. This provides very large amount of insurance with a minimal premium. And what is the section 80D benefit? This is the premium paid. This depends upon whether the person is below the age of 60 years or more than 60 years. Any individual or parents below 60 years of age, the premium which can be claimed in section 80D, this reduces the taxable income. From the total taxable income, this amount will be reduced. For the self and family, it will be 25,000. For the parents, it will be 25,000. Total amount that can be claimed is 50,000. And if the parents are more than 60 years of age and the person individual is less than 60 years age, then for the self and family, it will be 25,000. And for the parents, it can be up to 50,000 if they are more than 60 years of age. Total will be 75,000. If both individual and their parents are more than 60 years of age, then in both the situations, we can claim 50,000 and 50,000. Total 1 lakh income benefit can be claimed from the total income. And if they are members of the HUF, then the claim 80D claim is only 25,000, whether it's for the self or for the parents, but the total again will remain only 25,000. You can claim either for the self or for the parents. And in non-resident individuals, again it is 25,000 for self as well as for the parents. So what this is to give you a glimpse what the IAP is doing. IAP has tied up with the Cover You. They are providing medical indemnity insurance as well as the health insurance with quite a discount to our members. So you can get in touch with them. This is Cover You. You must have received a message from IAP also. This is the medical indemnity insurance. Say for 5 crore, the premium is, for the IP members is only 21,000. And for 1 crore, it is only 4,000. And it is available also for the medical establishments depending upon the number of beds. Thank you.
Thank you, Dr. Ajay. There are a few questions.
Yes.
When somebody is asking, he is in 30s, he's healthy, and he doesn't expect anything to happen to him like next 10 years. Why pay to an health insurance, rather invest those 25-30,000 in a mutual fund and enjoy the return?
What we can do is, in such case, if we can separate out a corpus, say about 3 lakhs or 5 lakhs, if for any medical emergency, because we need to have some emergency fund, say, which can take care of in any eventuality. Say if any accident happens, accident can happen anytime and it will affect our earning capacity also. So we need to have a emergency fund, say 3 lakhs or 5 lakhs, and we can have a super top up. Super top up, if the claim is say about 1 lakh, we need not claim from the insurance. we can pay it out of our pocket. But if say some disease happens or some large accident
He
happens,
doesn't want to take any insurance at this point.
they must have some corpus. They must define some corpus. This I'll use in case of any medical emergency. They can invest that fund in any mutual fund, preferably in a debt fund, so that they can claim it at any time.
Okay, there is one more question. There are critical illness riders available with life policy.
Yes.
Can they be replacement of health insurance?
No, they cannot be, because health insurance is the reimbursement. Say any hospitalization which happens, say due to fever or something, or due to some surgery, the insurance company is going to reimburse that money which is paid to the hospital. But in case of critical illness, say one is diagnosed with some cancer, if that diagnosis has been paid, then the company is going to pay that benefit. It is a benefit payout. Say I have taken a critical illness benefit for 10 lakhs. The company is going to pay that benefit to take care of the expenses where the hospitalization may not be needed. In case of health insurance, hospitalization is must.
Dr. Sumit is asking, what's the track record of Star Health Insurance company? Did you show? He just missed it.
Just let me share my screen. Just Star data was not available actually. I'll try to find out and let him know, but I think it's
That's fine. Another question: at 73, somebody is holding a health insurance, paying the premium to continue. It's a very high premium.
If we have sufficient build-up of the assets, where we can pay out of pocket, and because for the regular expenses, in that case, the super top-up will be very, very beneficial, because sometimes, say, some organ donation is required or something is required, or cancer treatment is required, which can be very large expense. That will be very helpful.
So the same question, another twist: if we have the health insurance, should we also take the critical health riders in the life insurance?
If we have health insurance, we can take a critical illness rider, because that will provide the defined benefit. Defined benefit means कि if I am diagnosed with cancer or something, say heart disease or something, this is going to give me some benefit, say 10 lakh rupees or 20 lakh rupees. In this, Star Health is paying around 94% is the claim ratio.
Okay.
94%.
So any health insurance company you will red flag not to go for it? Any specific company during your research?
Yes, there are certain companies which took very long time to resolve the claims, like Reheja and the New India in the public health companies. They should not be relied upon, because they're taking very long time. And also in private health companies, the Reheja, the Reliance had a claim ratio of about 83%. Cholamandalam had 82%, and Shriram General had 83%. So these companies which have very low claim ratio, they should be avoided.
What's the difference between top up and super top up?
No, the super top up is same, like where you take basic health insurance for 10 lakhs. So till the basic health insurance lakh is there, that claim will be paid by that company which we have taken the health insurance. And once the expense is more than 10 lakhs, then the super top up will come into play.
Okay. Okay, I think that's for the session. Dr. Riddhi, we can move on to the next session.
Thank you.
Thank you, Dr. Ajay.